Hi everyone, my name is Nikki, aka Hello Nikki B, and welcome to my YouTube channel. I'm so excited because this is my first video that I've ever made, and I'm so nervous, but I feel like this is so needed because I really want to be able to explain to everyone what happened this past week with GameStop and a couple other Reddit stocks. So in this video, I'm going to be talking to everyone about Wall Street bets, hedge funds, market manipulation, and why GameStop became the talk of the town this past week. First, let's talk about GameStop's background. So GameStop is a video game retailer, and as you can see in the past several years, their market cap has slowly started to bleed out. This is due to the fact that more people are purchasing video games online or downloading them onto their consoles. And quite frankly, they have an outdated brick and mortar business model. And we all thought that they were either going to go bankrupt or have the same fate as Toys R Us, which no longer is in service. If you look right here, there was a huge comeback recently, which doesn't make sense given that GameStop has not made the right service transitions in this economy to be rallying the way that it is. Traditionally, the way your stock would rise is if you, one, beat your target earnings for last quarter, two, had a really amazing product launch that was successful, or three, even better, Elon Musk tweets about you, which is actually what happened to Etsy. Elon Musk recently tweeted that he bought a hand-knit wool the Martian home for his dog. And he also tweeted that he kind of loves Etsy. Based off of this CNBC article, we can see that Etsy's shares jump after Elon Musk tweets that he kind of loves the e-commerce company. They surged as much as 8%, which is great to hear that a shout out from a billionaire can make your stock surge that much. I had to call out Elon because I'm a huge Elon Musk fan, but that's a story for a different day and time. Let's get back on track and start talking more about how stocks fluctuate and why exactly this happens. So now I'm going to level the playing field on how stocks fluctuate. I'm going to go into how stocks rise and fall. So stocks go up when people want to buy it because companies are doing well or people have a positive outlook on that particular stock. So for example, suppose I am the owner of a clothing store. I have 5 t-shirts in store that I am selling. Outside of my door, I have 10 people who want to purchase this t-shirt. Because of this increase in demand, I, as the retailer, have the power to now increase the price of that t-shirt. So like anything in our lives, stocks follow that supply-demand model that we are so used to seeing. So suppose you're buying a stock and the stock plummets. The worst that could ever happen is you lose your initial investment. Take, for example, I put $100 into one particular stock and later on the company goes bankrupt, insolvent, or maybe it closes down. And because of that, I lose my initial investment of $100. So this means that when you're traditionally investing and buying and selling, you will only lose at maximum the initial investment you put in. You will never go into a negative. This is how traditional buying and selling of stocks works for the retail investor. So I explained that part because that is one side of the story. And now I'm going to go into the other side as to how institutional investors invest. Now let's go into the other side, which is the institutional investors. So institutional investors for this particular scenario were short selling. So short selling is a much riskier process, and typically hedge funds and other large institutions are the ones who participate in this. So instead of selling the shares, you're actually borrowing these shares and paying someone for this later. In short selling, you actually win when the stock goes down because you essentially were betting that it was going to fail. So it is the inverse of buying and selling stocks. So let's do an example. Suppose there is a stock that is $10 right now. I know this company is going to fail in the future because it has a poor business model, its product line might be unsuccessful, or whatever. So I borrowed these 10 shares from my broker and then I immediately sell it to someone else. I haven't paid for these shares yet. So essentially what you're doing in short selling is you're borrowing those shares from a broker and then selling it to somebody else at the current price immediately. And eventually you will pay back the broker at some point once the stock has nosedived. So let's do even a deeper example. So suppose I'm a cell phone sales rep and I'm borrowing 10 phones from a dealer. I then sell those phones immediately to 10 people for the current price. So suppose there are 10 phones and the current price is $100. So this means I'm making $1,000 profit right now. Then 1 month later, the cell phone has a recall and then the price plummets down to $10 per phone. So now at this point, I have to pay back my dealer who let me borrow those phones. And when I pay my dealer back, I'm only paying $10 for those 10 phones. So 10 times 10 is 100. And I made the $1,000 profit from selling it to those other folks a while ago. So this means that I am gaining about $900 from short selling. So that's just one example to explain how in short selling you're winning when the stock plummets. Based off of everything that I just explained, you can see that short selling is a very risky investment to make, and that is why only large institutional investors or hedge funds participate in it. Because there is a possibility that you could lose more than just your initial investment, especially if that stock price concaves all the way up, which is exactly what happened in this scenario. So one hedge fund in particular called Melvin Capital shorted the GameStop stock by over 100%. That is a lot to risk because they are hedging against more than 100% of all the liquid capital available for GameStop. That's a lot to be risking. And unfortunately, it did not fare well for them because they have lost billions of dollars. And the folks who decided to see that opportunity and buy the GameStop stock are now essentially winning. So there was a community and a group of folks on Reddit who did some research on what hedge funds were shorting which stocks, and they saw that Melvin Capital was shorting GameStop by over 100%, and they saw this as an opportunity to make a lot of money. So when you get a group of people collectively together and you encourage them to buy a stock, this naturally drives the price up, which is exactly what you're seeing right now from GameStop going from almost about $20 per share earlier in January of 2021 to now reaching about over $300 per share. It's the fact that a community was able to band together, come together, share resources and use, and essentially drive up the stock price in a way that we have not seen before happen. So this is essentially a very pivotal moment because this is the rise of the retail investor. So retail investors are everyday people like us who are participating in the stock market and just trying to make a profit. This past week was such an exciting time for GameStop and a couple other Reddit stocks, such as Nokia, Bed Bath & Beyond, AMC, and a few others. A lot of the folks who wanted to purchase these shares were using Robinhood as a brokerage platform to buy and sell these shares. However, there was one morning where Robinhood disabled the ability to even query and search for these Reddit stocks and the ability to purchase them. This caused a lot of frustration amongst its customers, and they got a lot of heated tweets and customer complaints, and pretty much everybody was talking about it. Now I'm going to go into why this issue happened and why Robinhood had to temporarily disable the ability to purchase the Reddit stocks. So Robinhood was going through a liquidity problem. The majority of people who are purchasing shares, buying and selling shares on Robinhood tend to be retail investors, so everyday investors such as ourselves. When you purchase a share, it has to go through a clearing process. This clearing process is a way where your bank communicates with the brokerage firm, and essentially that transaction is made when they see that you have the right amount of money to purchase that stock. This is what happens in a centralized transaction process. And that's why I firmly believe that cryptocurrency is going to be the future, because cryptocurrency is decentralized, but that's going to be a topic for another day. So let's do a deep dive into the liquidity issue that Robinhood was facing the past week with GameStop and a couple other Reddit stocks. So as I mentioned before, the clearing process does take some time because the transaction has to complete between two parties. So imagine this transaction happening on a scale of millions and millions of people who are trying to purchase GameStop at the same time. Because of this scale, Robinhood simply did not have the bandwidth to complete all those transactions. And this frustrated a lot of Robinhood users because they weren't able to purchase the AMC and GameStop shares. And this really upset them. What they did that I think they should not have done was they shut down trading in an asymmetric way, meaning that you were able to sell your shares but not buy them, meaning that this actually helped drive AMC and GameStop and the other Reddit stocks to kind of plummet a bit because everybody was trying to sell or they were panic selling, and it just caused a lot of chaos. Obviously, I can't comment on the motivations behind Robinhood halting all trading, but what I can say is this is my opinion and my take on it. So this is my take on what happened this past week. Thank you so much for making it this far into the video. I hope this is really informative and helpful. I definitely want to continue to make more of these videos and also highlight a lot more into why I think decentralization is so important for our economy. And I think that it's important to have these kinds of discussions because a lot of finance jargon and just everything about economics is made way too complicated, and I think a lot of it can be really simplified for the everyday people, and I really hope to be able to do that. So like and subscribe if you like this and found it informational, and I'm going to continue to do more of these. Thanks so much, everyone. Bye.